Hey guys, what is up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla stock. Let's go over what is happening to the stock, what we can expect moving into next week, and all of that good stuff. So as per usual, if you enjoyed the video, please don't forget to hit that like button. This is not financial advice and I am not a financial advisor. And of course, if you do enjoy my technical analysis on charts and you want to hear my thoughts throughout the day even more, as the market is trading live pretty much every single day, well, I have a membership session on YouTube. That link is down below in the description of the video. For just $3 a month, you can access some of my intraday thoughts, post updates every single day. The market is open, mainly on Tesla, but other stocks as well, sometimes that I'm eyeballing too. Or for $5 a month, access to all that plus NVIDIA daily updates. But jumping into a Tesla with an actual pretty nice day, 4% on the day, closing at almost $46 per share, which is pretty impressive compared to the market, with a nice little outperformance, as Tesla is kind of roller coastering around this kind of 330s to 350s ish range, a decent amount, being fairly volatile, and despite it going up and down and seems like 3% almost every single day, it's still just really tight within this specific area. So I'll give you what I'm personally seeing right now, and I'll give you my personal and honest thoughts, right? So let's get the good news out of the way first. I'm going to start off with the weekly chart, right? I want to start off with the bullish thesis first. The bullish thesis is the fact that the weekly chart, so the bullish thesis is the fact that a bearish thesis didn't occur. And what I mean by that is the fact that, again, today's a shorter day, but for about half of the day, we were trading below 340, right? Closing below 340, in my opinion, would have been actually pretty bearish. Why? Because, the candle would have been, actually, I took a picture of it from members. Let me go ahead and find the screenshot of it somewhere here. This one. Right, this is what it was trading like in the morning-ish, we'll say, right, around 336 roughly. The reason this would be bearish is because, well, this if we close something like this would have been a bearish engulfing weekly candle, which would have been obviously pretty bearish, right? So the fact that we closed above 340 to me is actually a good sign. It kind of nullified that pattern. So even though it's not technically a bullish weekly close necessarily, the fact that it avoided what could have been a very bearish weekly close is obviously a good sign for the bulls. So that's something I want to point out. In terms of the actual weekly candle itself, what is it telling me? Well, it is telling me the fact that it is taking this area and, turning it back into support right now around this kind of, 330, 325, right? This area is so far acting as a support, which is good. That is a good news for the bulls, and that's what the bulls want to be seeing. So that's the good news on the weekly chart time frame. In my opinion, you can make a slight argument the fact that we are setting up a bearish, what is it called? A bearish, let me remove this for now. A bearish weekly dark cloud cover, a weekly dark cloud cover, right? You can, I guess, make that slight argument. I need to look a little bit more into it, honestly. Here, dark. Let me just show you guys what it actually looks like. You can maybe be the judge yourself, but this is kind of what a dark cloud cover looks like. Nice little green candle, and then the second day or week or whatever is a red candle that started higher, but now that only ended lower, but ended at halfway or below the previous weekly candle. That's what a dark cloud cover is. So did we actually end up forming that? Again, remember this week's Trading Views weekly candle from last week, if you remember, is a little bit glitched, right? It shows that it went higher than it actually did. TrendSpider is actually the correct one. So let's take a look at TrendSpider. And you can kind of make that argument. You can kind of make the argument the fact that we ended at about halfway-ish in the body of the cloud on the weekly time frame. So, there are some arguments there to be made. I'm not super convinced by it, but there are arguments to be made. Now, that's overall the weekly time frame analysis. But again, the bands, don't forget, we are still in the red section of the bands. We are still very, very overbought in the bands. And again, like I said many times, this game is all about risk versus reward, right? And again, every single time we've, held the weekly this often in this overbought territory, yeah, it's been there for a while, right? Like sometimes it lasts in this overbought territory, like here it lasted for a couple like 3 or so weeks, 3 to 4 weeks even, right? For instance, right here it lasted even more. Here it lasted for like a whole month almost, right? And we're only on week 4 roughly, you can argue. We can still technically be in this overbought territory for easily another week or two, right? Based on back here it lasted for like 5-6 weeks, right? Even back here lasted for also about 6 or so weeks. So again, the point is the fact that, and same here, right? The point is the fact that Tesla is good at getting to these overbought territories on the weekly. It's good at staying there for an extended period of time, sometimes several weeks, like again, easily a month or higher. And it's good at forming what looked to be like bow flags. Like this looks like a bow flag, it went down. This looked like it could have been a bow flag, it went down, right? Same with this one. Easily could have been a bow flag like this, right? It went down. So, Same this. It could have been a bull flag over here. It also went down. The Tesla's very good at these things. This is why I'm not fully convinced of this. I'm not going like all in at 340. You know, it's just that there are definitely risks here, right? So just keep that in mind. That is the bearish side on the weekly time frame, in my opinion. So take that into account. Now, let's go over to the daily chart really quickly. The daily chart's obviously really important as well. And the issue here is the fact that, well, let's go over the bullish side first, actually. Let's go over the bullish side first. The bullish side, similar to the weekly time frame. You know, we definitely took this area, you know, and we took it not only back into a support, right, which was, of course, a past resistance, like, for instance, here and here, right, this kind of 325 to the low 330s-ish range, which yesterday we proved that pretty well. But we actually ended up closing back above the 8 EMA, right? That was a risk. Yesterday, closing below the 8 EMA was the first time we closed below the 8 EMA, which is the top line, essentially, of this little green kind of cloud type looking, you know, dark green cloud type looking indicator. That was the first time we closed below the 8 EMA yesterday, or not yesterday, I guess Wednesday, right? Ever since this post-election Trump rally has begun. So the fact that we closed back above the 8 EMA is a good sign. That's a good sign for the bulls. That tells me that the momentum is still very much alive for the bulls, and that, you know, things are still going for them. And there is still absolutely hope for the bulls, even to go higher past 360. That is still something worth talking about, because we're still maintaining above the 8 EMA despite Wednesday's potentially like false breakdown, arguably. It's a good sign. That is a good sign for the bulls. And on top of that, if we go over to the 1 hour chart, obviously there's a, you know, a little bearish looking thing right there. If we go over to the 1 hour chart, yes, the bands are still red, but as long as we can get some follow through moving into Monday, you know, these bands on the 1 hour can actually turn back to being bullish, which could be a nice sign for the bulls as well. It's not there yet, but it's not looking too bad at all. And it looks like that can happen. So let's, you know, watch that very closely. Now, other thing that's bullish on the 1 hour chart is the fact that, you know, this area right here was a resistance, right? This area right here was an old support, became a resistance, and this easily could have been a massive bear flag. But ultimately what we did was we actually went back into that range. We went back into that range, and we actually ended up closing back within this range, which again is not necessarily bullish, I guess, but it's not necessarily, but it's not bearish, right? Because we could have easily come up like this, turned into like a much stronger resistance and went lower sooner, right? But the fact that we're back in this range, again, not necessarily bullish, but it eliminated what could have been a more bearish occurrence, essentially, because again, we easily could have rejected and went down even lower. So that's a good sign for the bulls as well. But there needs to be more work to get some, you know, proper bullish continuation moving forward. So watch for that. Now, let's talk about the bearish side, right? What are the bearish things about this area, right? Because there are definitely some bearish things here to watch out for that I am still, you know, very cautious about, to say the least. Let me remove the market or the bands for now. The bearish thing is pretty simple. Take the Fibonacci from this recent swing high that we had, and, you know, what seems to be definitely the recent swing low. And this is where the Fibonacci's come in very important. And this is nothing more than essentially a dead cat bounce, moving higher a little bit here, right, off of this, you know, decent sell-off that we had from all the way 360 all the way down to 325. If this is just a dead cat bounce, if this is just essentially, you know, a kind of a bear flag type situation still setting up, the levels to watch for is going to be this 618 Fibonacci. Best case scenario will be around the 355-ish range, which was that 786 to 826 Fibonacci retracement. We're very close to the first main one where, you know, I think that's the place we will reject if we do ultimately end up rejecting. This is nothing more than a dead cat bounce, essentially, short term, of course, right? Which again is sitting around 347, 348, somewhere around there with that 618 Fibonacci, which actually lines up pretty well with this resistance level that we've had obviously issues before, that we had that false breakout and then a break back down under. So watch for that. This is really important. Like, at the very least, this level needs to break and hold on the 1 hour time frame for me to gain any confidence in the bulls here, because despite us eliminating some bearish thesis potentially, like I mentioned earlier, I'm not all on board on the bullish train either, because I need more confidence in it. I need the bulls to prove to me the fact that, yes, you know, we are ready to go higher. We are ready to break 360. As of right now, I'm still not buying it, despite today's, you know, pretty impressive performance. You know, we could have easily had this little rally, bull flag, and now we rallied up even higher. So, you know, that maybe a little bit more upside and left, but we could have potentially already played out this little mini counter trend rally, which could be something to watch out for. And Mo, someone on Twitter or X that I follow, who's it's very good to eliminate noise, right? So what I'm trying to do right now is actually I'm trying to eliminate even more noise on X. There's a lot of noise that honestly sometimes even gets into my head and makes me miss out on very good opportunities because I'm thinking of too many potential things, and a lot of them are bearish. That too much noise is bad. Too much noise is bad. Anyway, Mo, in my opinion, is one of the few people that isn't noise. He's a very good trader. He's been doing it much longer than I have, but he's an Elliott wave player or trader or whatever. The way he's looking at it, and this was back on 1125, right? This is back when we were still up here somewhere, right? Is he was looking for a counter trend 3-wave correction back down on an ABC pattern. A was this pattern right here. We had this move down A, you can see here. Bam, we finished A almost to perfection on how he called it, into a B rally. And this right here is my issue. This could still very well be that B rally into a continuation on that C wave lower, which will bring us down, again, based on the Fibonacci, he has anywhere between 320 to 295, all the way down to $277. One of those three levels is where he expected to move down to. Nobody knows, obviously, for to perfection. But I agree. Unfortunately, I do agree with him, right? I still view this as a potential corrective little mini rally to the upside, which is why I'm personally still being very cautious, and I need Tesla to break above this, right? With the Fibonacci's especially, because there's also a risk that this is just potential head and shoulders pattern setting up as well. There are some heavy risks here, right? And this rally seems to be a rally that's meant to trap some bulls or people that are FOMOing in thinking, wow, I think we're ready to rally. We could be, but there needs to be more proof essentially behind that. For me personally, for me to really be convinced by this. I'm not convinced just yet. That's just my opinion, of course. Take it as you will. And yeah, I think that's pretty much it. I think that's the majority of what I wanted to cover on Tesla. Again, if Tesla does have, if this ends up, obviously being a dead cat, a false rally, essentially a corrective rally back up, which again, still could be. I do expect us to unfortunately make at the very least, a lower low than the recent low that we had on the 1 hour time frame. It can easily come down to the 21 EMAs, somewhere around the 320s to even the 3 teens. That's important. If, in my opinion, we lose at any point, if this ever is lost right here, this 310-ish range right here, I do believe the correction will be a little steeper, and I think at the very least it'll come down to about 285, if not all the way down to the 270s. But as of right now, if this is a dead cat, which I currently expect it to be, and Tesla does make a lower low on the shorter time frames, again, I do expect this to at the very least come to around the 21 EMA, somewhere around here. But as long as this holds, we could be setting up what looks to be a potential nice looking sideways, massive bull flag. And as long as this level holds, I think we can go higher, decently higher, actually moving into potentially December, like mid-December, let's just say that, right? Christmas rally, Santa rally. Anyway, that's kind of what I'm expecting. In terms of options flow, let's take a quick look over here. Options flow, some puts did come in on Tesla towards the end of the day. I mean, the bulls definitely overwhelmed the bears throughout the day, but what I like to look at mainly is what happened towards the last 5 minutes, right? The last 5 minutes or so. In the last 5 minutes to an hour even, 1.1 million put came in, 1.2 million put came in, right? Obviously some calls in between, but definitely the puts oversizing the calls towards that, last couple minutes of the day, right? The last couple minutes here, you can see from 12:58 and upwards. Let's take a look at here. Bam. 1.2 million put, 100K put, 500K put, 600K put, 200K put with a 400K put, but 300K call and 120K call. So the puts overwhelmed the calls here, in my opinion, towards the end of the day, which is why I'm also a little bit skeptical. 27 million confirmed bullish flow, however. But again, I need to see more follow through from the bulls for me to be really convinced. And as of right now, unfortunately, I'm not convinced. Oh yeah, last thing I want to mention, I talked to this about with my members. I want to mention it here very quickly. The MACD, despite today's very respectable 4% rally, still red. Now, granted, it's not making a lower low, which is good because it was the majority of the day, but it's still red. It's still cross bearish. And the last 2 times that something like this that was similar that happened, from a massive rally to sideways consolidation into the MACD, essentially showing pretty much a bearish divergence here. Massive rally, started kind of zigzagging exactly like the way we're doing right now. We're pretty much right here somewhere, right? Ish. MACD also cross bearish. You can see it cross bearish, and despite us still going sideways for a few more days, right? Like for instance, all the way over here, you can see the MACD actually also made a, actually, you know what? We could easily be right here. This literally could be us right here. This candle right here, July 22nd, 2024. This could literally be today. Like, this literally seems almost to perfection what today is, because the MACD despite it also being crossed bearish not too long. On the third kind of, MACD histogram candle, if you will, and today we're on the third one as well, it actually made a higher low, exactly like this did. However, it was still, the lines themselves were still crossed bearish. The next day was red, and we ended up going lower. And then we're pretty much setting up an almost, like, it's crazy how similar it looks, in my opinion at least. So this is why another reason I'm not fully convinced, because it just looks like we're pretty much doing these three candle structures right here. Let's see. I could be wrong. Who knows? Nobody knows. But just looking back at it like this, tell me this doesn't look almost identical, especially with the way the MACD is behaving. Almost identical. Now, granted, this drop was, of course, based on earnings. Obviously, there could be some catalyst that comes out or it doesn't. So obviously, take it with a grain of salt. Nothing is perfect, but it looks damn similar. So I'm being a little bit cautious with that. I think there was another instance where it was also pretty similar. I think it was like back here. Yeah, I think it was like back here. Same idea. It kind of went higher as the MACD crossed bearish and then ultimately went lower. But this is probably the best example. So anyway, just watch for that, in my opinion, right? Just watch for that. Same idea, I guess, kind of here too, right? Same idea. MACD kept going lower, despite us kind of going sideways from this decent rally. And obviously we dropped much lower. Anyway, that's what I got. Let me know what you think. Thanks for watching. Peace.